Normal 30-year contract rates have ticked up over the most recent few weeks. Rates have vacillated such a long ways in 2023, however they're a long way from the highs we found in November, when rates were more than 7%. Generally speaking, contract rates are supposed to go down consistently. As rates decline, borrowers ought to make some more straightforward memories finding moderateness throughout the spring and summer home buying season. A borrower securing in a rate today would have a more modest regularly scheduled installment than somebody who repurchased in November, or even as of late as early walk. The present home loan rates will influence your month-to-month and long-haul installments. By connecting different term lengths and loan costs, you'll perceive the way your regularly scheduled installment could change. Contract rate projection for 2023. Contract rates fired ticking up from memorable lows in the last part of 2021 and expanded north of 3 rate focuses in 2022. Be that as it may, many figures anticipate that rates should fall not long from now. In their most recent figure, Fannie Mae specialists anticipated that 30-year fixed rates will drift down all through 2023 and 2024. Be that as it may, whether home loan rates will drop in 2023 relies on the off chance that the central bank can fix expansion. Over the most recent year, the shopper value record rose by 5%. This is a slight stoppage contrasted with the barely a month ago, and the Federal Reserve is probably going to accept this as a sign that it actually has more work to do. If the Fed acts too forcefully and engineers a downturn, contract rates could fall farther than whatever ongoing estimates anticipate. In any case, rates presumably won't drop to the notable lows borrowers partook in a couple of years prior. Would it be a good idea for me to get HELOC? Upsides and downsides on the off chance that you're hoping to take advantage of your home's value, or HELOC may be the most effective way to do so at the present time. Dissimilar to a money-out renegotiate, you will not need to get an entirely different home loan with another financing cost, and you'll probably get a preferred rate over you would with a home value credit. Yet, HELOCs don't necessarily check out. Taking into account the advantages and disadvantages is significant. HELOC genius is just compensation interest on what you get ordinarily have lower rates than options, including home value advances, individual advances, and charge cards on the off chance that you have a ton of value. You might actually get beyond what you could get with an individual credit. HELOC cons rates are variable, meaning your regularly scheduled installments could go up. Removing value from your home can be hazardous on the off chance that property estimations decline or you default on the credit. Least withdrawal sum might be more than you need to require. When will house costs descend? Home costs are beginning to decline, yet we probably won't see tremendous drops, regardless of whether there's a downturn. The S&P Case-Shiller Home Value List shows that costs are still up year over year, however they've been falling consistently. Fannie Mae scientists anticipate that costs should decline 4.2% in 2023, while the Home Loan Financiers Affiliation expects a 0.6% diminishing in 2023 and a 1.4% reduction in 2024. High as can be contract rates have pushed numerous confident purchases out of the market, easing back home buying request and coming down on home costs. However, rates might begin to drop this year, which would eliminate a portion of that tension. The ongoing stockpile of homes is likewise generally low, which will probably hold costs back from dropping excessively far. What ends up lodging costs in a downturn? House costs typically drop during a downturn, yet not generally. At the point when it works out, it's by and large in light of the fact that less individuals can bear to buy homes, and the low interest powers merchants to bring down their costs. The amount home loan could I at any point bear? A home loan number cruncher can assist you with deciding the amount you can stand to get. Mess with various home costs and initial installment adds up to perceive how much your regularly scheduled installment could be, and ponder how that finds a place with your general financial plan. Regularly, specialists suggest spending something like 28% of your gross month-to-month pay on lodging costs. This implies your whole month-to-month contract installment, including expenses and protection, shouldn't surpass 28% of your pre-charge month-to-month pay. The lower your rate, the more you'll have the option to acquire, so search around and get pre-approved with various home loan banks to see who can offer you the best rate. Yet, recall not to get beyond what your financial plan can serenely deal with.